Hello friends. So, as you guys know, Wealth Summit is approaching super fast. It's this Sunday, and Sanjeev ji is with me today, and I want to talk to him a little bit about what are some of the major changes in the world of taxes that he's going to address at this Wealth Summit. Obviously, this is the year end. Many of you guys are probably wondering what can you do in 2025 to save on taxes. And then some of you guys are wondering about 2026. So we're going to address both of those issues at the Wealth Summit. Some of you guys got blessed with RSUs, ESPPs. Some of you guys made tons of money in stock market, and maybe some of you guys also did some great real estate transaction, or maybe you're just getting ready to do those real estate transactions. And in this Wealth Summit, we're going to talk about it all. So Sanjeev ji, first of all, welcome. And I want to talk to you a little bit about the upcoming Wealth Summit and what are some of the key subjects that you're going to be addressing at the summit.
So before I go ahead and talk about topics that I'm going to discuss at the Well Summit, I just want to make a notice, some pointers here. We always, whenever a client work on the taxes, or whenever a person finishes his filing his return, he always sees money vanishes from his account, and he feels very bad. He keeps thinking that time, hey, what happened, man? All of a sudden, worked so hard. I made so much money. Where's my money? I don't see it. He talks to his spouse, or his spouse also does not. Whenever the spouse says, man, you keep working day and night and day out. I don't see that money. The business owners, they keep saying, you show me so much profit. End of it, I don't know where's the money. Where's the money? I don't see that money in. So this is a unique problem that everybody faces. Everyone in the family faces, even the kids also faces. So the thing is, it's all about planning. It's not about losing money. The time has come when we have to look at how to make taxes work for you, not against you. That's what we are looking at the Wealth Summit. We need to plan the things in the way that you pay the least amount of taxes. The money that comes to your pocket after taxes should be enough so that the question that comes from your spouse or kids or from yourself will be covered. So tax is a very big portion of your total wealth. If you look at tax from income tax from federal tax point of view, you pay around maximum is 37%. Then there is a net investment income tax, which comes around 3.8%, which is levied on your investment income, capital gains, if you make certain amount of income. Then we talk about state taxes. Living in California or other tax-heavy states, you can go up to 10 to 13%. In California, it's 13.3%. And then there's 1% mental health taxes if you make more than $1 million. Then we talk about social security taxes. We talk about we have federal social security tax about 6.7% and 6.5%, and then we have Medicare taxes, which is about 1.45%. Around 7.65% is the total tax. So you're counting tax after tax. So in a tax return, if you look at the total taxes that one gets, it can be around 60 to 62%, counting everything. So now that's the major portion of the tax or money that goes into taxes. So how to save those things? How to plan around these things? It's important not only to understand the strategies, it's also important to know how to implement those strategies. So in the Wealth Summit, we are not only going to cover the areas that are important for tax planning, but also how to implement those strategies. We can, for example, we work on W-2s. We have people working on W-2s here, employees. Basically, in the Silicon Valley, like you rightly said, there are people making RS, there are people getting RSUs, ESPPs, ISOs, stock options, and non-qualified stock options. The base salary can be low, but they have so much stock options right now. If I look at their W-2s, it can be anywhere from 400K to $1 million plus, or maybe 5 million plus. And all of them, all the money that all the option they get is going into taxes, and they don't have cash flow because again they have to sell RSUs, or the broker have to sell the stock options to cover the taxes. So they don't see the money in the bank, and then they are paying taxes on top of it. So it's a paper money that happens, unless they convert that paper money to real money by selling that. And the question that comes for them is which one to exercise, which one to sell, and which one to exercise. Whether to sell RSUs, whether to sell ESPPs, ISOs, which one is better? No. So you need strategy for that one. Now, if you're on W-2 and you're making enough income, for example, you've got bonuses, or there's a merger acquisition with companies, or you're looking at somebody, you want to go to a bigger company and the salary base is increasing. You want to not only see from the point of view how to increase your wealth, how to increase that money, but also to make sure that how much money comes to your pocket, and what are option you can use to not only save taxes today, but save taxes in the long run. So we're going to cover those strategies for people who are on W-2, and not only for people who are making a lot of money on W-2, even for people starting their career on W-2s, on employees, as employees. Where should they look for? How they should plan their career going forward? Uh, so they keep working on it. So in the Silicon Valley, most of the question I ask the client, have you ever started look into starting a business, or have you ever started investing in real estate? Most answer that I get from the clients are no. We don't know any friends or family members in the business or real estate. We just keep working so hard. We don't have time. We don't have time. We on the weekend we keep running with our kids. On the weekdays we keep working with our employees. So we don't have time. And the tax planning is not about time. Tax planning is within that time period, how much money you can save and how much money you can put in your pocket. That's what I keep saying. That's why we held this Wealth Summit. So we're going to cover that for the W2 employees, people who are working on W2s. Then we're going to work on investment. We are going to talk about investment planning. Not only the money that comes to us, whatever money you save from taxes that comes to your pocket, you have to make sure that investment from your pocket should be done in a way that can be tax efficient. Again, whatever income you derive from this investment should not be subject to higher taxes, should be subject to lower taxes. And you have to diversify your portfolio in such a manner that that tax rates should be the lowest one for you for the return that you get from them. So we're going to talk about all those investment strategies from the tax point of view. Then we have the capital gain strategies planning. Like the same thing happened with stock options, then different kinds of investment planning you have done. How to avoid capital gains, how to pay least amount of capital gains. One is always surprised when we talk about capital gains planning. There's a 0% tax bracket also for capital gains, but you need to get that 0%. And how to get that 0%? 0% means no taxes. But how to shift income, how to shift all the assets, how to get the 0%? That's what we are going to show on the capital gain strategy that we are going to discuss at the Wealth Summit, and how to plan the areas, how to go and plan your stuff for retirement, uh, and so that at the end you don't pay taxes and you have a proper legacy planning for your kids, and how to transfer wealth to the kids, how to gift assets. We're going to talk about all those gifting and legacy planning. And if some people are very lucky, they have a lot of stock options. Some people are very not so lucky. They might not have so much money, but they might have invested in stocks, invested in ETFs, and other things. And they must have built a wealth around them. And how to safeguard those wealth from the creditors, how to protect those wealth from others, what options they have. For example, they can do irrevocable trust. We know we do a revocable trust. Everybody does it, but nobody takes care to update the trust document. What about irrevocable trust? How to use irrevocable trust from a tax point of view? The time has come when people have to look into that area, and you can shelter income. Not only income, you can shelter a uh, lot of things like stock, appreciate stock, appreciate real estate, appreciate businesses. Before you sell those businesses, how to use the irrevocable trust to shelter the capital gains without paying any taxes, to shelter income from them. So all those strategies will be discussed at that point at in the Wealth Summit. In addition to that, of course, we have the foreign income reporting requirements. It's a big thing. A lot of people in this current economic scenario that we have right now, a lot of people looking to go back to their to India or come from, like, people coming from India, not much. But there are strategies how to use the money, how to use foreign tax credits. Now we have not talked about foreign tax credit in detail, but this time we are going to talk about different kinds of buckets that are used in the foreign tax, like general category and passive category. How to use those buckets to save the taxes, not only from the India point of view, if your income is taxed from that, but also use that and use it from US point of view. How to use the unused tax credits. So we have to look into that, because fortunately, unfortunately, we have investment in both the countries, and definitely we are looking to transfer money, we are looking to gift money, we are inheriting wealth, we have assets in both the countries, and we are paying taxes in both the countries. How to use those tax brackets to maximize tax savings, not only from India point of view, but also from the US point of view. We have to cover that area as well. So it's if you see, we are covering such a vast area of planning, tax planning. It does not stop at one. It starts from W-2s, being an employee, shifts to investment, shift to capital gains, shifts to estate planning and gifting, then shifts to retirement planning, then also goes to the foreign income reporting requirements. So it's like we call it the pillars of wealth. These are the foundation of any wealth creation. And this foundation is required, because if the foundation is weak, everything will fall apart. So we have to create those foundation. And once the foundation is strong, anything that you can implement on those foundation is going to be very good. Excellent. So that's what we are going to cover. That's why my thing will be at this Wealth Summit, not only to provide strategies, but how to implement them and how to make sure that when you go out, when you go from the Wealth Summit, one thing you can take, something you can take from the Wealth Summit is you can save taxes, you can grow and make more money by saving, by diversifying portfolio. And how to diversify portfolio, you are the experts, you have experts there, and how to protect your money. So that's the whole goal of the Wealth Summit.
Yeah, and then also Sanjeev ji, this year we have the big beautiful tax bill, right? So a lot of opportunity there. So we're gonna go into great detail on that and show people where they should be looking at, because there are a lot of nuances where people will probably just ignore, and by the time they figure it out, the entire year is gone.
Yes, because if you look at the see when I look at the One Big Beautiful Bill Act, other than the populist strategies around it, like no tax on social security, no tax on unemployment, no tax on tips, uh, forget those 4 or 5 things, because those are very restrictive to income levels, which in the valley, like people making good money, they will not qualify for it. But other than that, there's so many things inside that One Big Beautiful Bill. It's just crazy. For example, the QSBS, Qualified Small Business Stock, is one of the great strategy one can use. We fear forming as C corporation, but now C corporation is becoming so important. If you're looking to invest, if you're looking for to get money from outside, like angel investors, and want to grow the like you're developing some technology. Of course, we are in an AI world, AI scenario. A lot of companies are doing AI research and development. Uh, that's another area of One Big Beautiful Bill, which is coming with the R&D expenses. But QSBS is the I will say the blueprint of how to save taxes by forming C corporation, doing the product development, getting angel investors money in, and then how you can save taxes on up to $10 million of gain, and how to multiply that $10 million is not based on a ownership, how to get different ownership inside that QSBS, and then there's a 5 year, 7 year rule with QSBS. R&D expenses is another thing. A lot of consulting companies are in the Bay Area, staffing companies, consulting. If they can segregate their departments the way the regulation wants, then you can get tax credits, R&D credits for that R&D, and you can go back at 2 years back, and you can change all the R&D expenses that you amortized over a period of 5 years. So R&D is a big thing. Opposite zone fund is another starting from 2026. How to use that opposite zone funds to one's advantage. You can look into that. In addition to that, of course, we have the 179 depreciation, bonus depreciation, which is a big thing on the real estate. combined with businesses is a like you can save a lot with one big beautiful bill. Definitely, one should know about it, of the changes about one big beautiful bill act, and how to, like I said, we need to implement those changes in your schedule. So of course, one big beautiful bill is not only important, but is what is very critical for planning. And I will take another point here. California taxes is a different animal altogether from federal. Not only is it did not conform to Tax Cuts and Jobs Act, is not also conforming to One Big Beautiful Bill Act, but there are things around that are provided. For example, pass-through entity elective tax, which are there for S corporation LLCs. How to use them? A lot of people do stock trading. How to, instead of being claiming as a tax trader status, is there any way around we can use to take the tax advantage? Advantage? Yes, there are ways to do that. If you own real estate and you're not active investor because of number of hours, is there a way to work around it? Yes, there are ways to work around it. We're going to talk about all those things in the Well Summit.
So there you go, friends. So once again, if you have not registered just yet, it's November 16th, this Sunday. So we only have a few more days left. And I am super busy getting ready. And I'm sure Sanjeev ji is super busy making thousands of slides. He loves slides. So we're going to have a lot of slides for you guys. We were at the Oasis Palace finalizing the food and all that. So that is all taken care of. So, we're going to open up the doors 7 a.m. in the morning this year. Usually we'd like to open at 8, but this year a little bit early because we want to get started sharp at 9, and the reason behind that is just too much content, just too much good content. Every 15 minutes the topic changes, there's something new, so it's going to be very fast paced. It's like getting a mini MBA in one day. So if you know a friend's family member, somebody working at a startup, somebody's company getting acquired, somebody making a lot of money, they need to really figure out what are some of the things they can do to reduce their taxes, then this is the event for you. So just go to sanjeevcpa.com and get that registration done. So we only have, I don't know, maybe about 50, 60 seats left at this point, Sanjeevji. So once they're gone, the hall is full and we are done for this year. Then we'll do it next year. All right, guys, thank you so much. And Sanjeevji, I will catch you later.
Thank you. Thank you.
Bye.